All right. Hey guys, how's it going? So today we're going to talk about September investing strategy, what strategy I'm using as a modest and as a conservative investor to get through the month of September. So traditionally, I have here written down in my notes, we have seen that, and I've also read in the news that September is a really bad month for stocks. So if you take an average of every month starting from January, February, March, all the way up to December, you will see that historically, the stock market tends to perform really bad during the month of September, and nobody really knows why. If you take an average starting from 1950 up until 2020, the S&P has performed at an average of negative 0.5% for the month of September, which is really weird since the market has returned approximately 10% for the past so many years. So nobody really knows why that is happening. Nobody really knows the cause behind it. There's obviously rumors in the market where some people say that some people go behind tax loss harvesting during the year end. So basically what tax loss harvesting is, if you have a certain amount of stock and you're losing money on it, you could sell that stock, or you could sell those funds during this particular month, or any time throughout the year, basically, and use all of that loss to write off in your taxes for next year. So your taxable income kind of goes down. Um, so maybe that's what people are doing around September, and maybe that's why September is so bad for stocks. And that's one of the rumors that kind of is circulating. The other rumor is that September is towards the tail end of the year. It's towards the tail end of Q2 almost. Q3. I'm sorry, Q3 almost. And Q1, Q2 are usually typically great performance. Q1 is great performance. Q1 has great performance because Q4 of the previous year has holiday season, so people shop for Thanksgiving, people shop for Christmas presents and whatnot, and that's why Q1 is great. Q2 rides off of the momentum of earnings from Q1, and that's why Q2 relatively does okay. But when you get into Q3, there's really no catalyst for the stock market to perform well, and maybe that's why Q3 investors start to get a little bit impatient, and the stock starts selling off. So there's two kind of like theories going on around in the market where one is tax loss harvesting, and the second is just investors getting impatient because of the stock market losing momentum. So that being said, let's talk about what I'm doing for the month of September. So I'm going to talk about my investing strategy here real quick. Um, you know, what happens is whenever the stock market drops, that's exactly what I'm looking for. It's not the greatest feeling in the world because obviously you have a lot of money at stake, and stock market dropping can be scary because you don't know if that's going to come back up in the future or anytime soon. So but yeah, the stock market dropping offers a great opportunity in terms of a discounted price for the stock, for any stock to buy, as a matter of fact, and capitalize on the difference between where the stock was in the previous month and the stock being, say, 5% or 10% down from its high in that previous month. So it's always a great opportunity if you're planning to buy for the short term or for the long term, and if you're planning to buy and hold to make that extra 5 or 10% worth of profit. So apart from that, what happens is I usually keep a certain amount of cash on hand. So right now, if I look at my portfolio, I have about 8 to 10% of my holdings in cash, and I have had that amount of money in cash since probably um, November last year, and I've just been waiting for that right moment to buy in. And every time I think about, hey, I should probably wait for another month and see what happens, stock market keeps going up. It just keeps grinding up, and that's been what's been happening for the past year here. The S&P 500 is up 22% for the year, starting January 1 up until now, year to date. And it's fascinating seeing that happening because there's been so much uncertainty in the market, so many things going way beyond what is considered normal. Supply chain being affected, freight costing probably 4 or 5 times of what it usually does. Car companies shutting down their factories due to chip shortages and whatnot. And even with all of that, even with the unemployment, even with government printing so much money, the stock market's still 22% up. So it's uncharted territory we are in right now. There's rumors that the stock market might see another 8 to 10% correction anytime soon. Nobody knows what's going to happen. The best way to go about it is just keep dollar cost averaging. As long as you are investing for the long term, just keep buying in, keep buying in, keep buying in. Every week, every day, every month, whatever works for you, whatever however much money you have available, just keep doing that, and that's probably the best way of going at it. So for my investing for September, I have divided that into three major categories. The main category being my automated investments, which is my 401k account. So I currently work at a job at an automotive company, and I get paid a couple times a month, so my paycheck comes in bi-weekly. So what happens is I have a certain amount or certain percentage allocated to my 401k investments, and even before I get the paycheck in my bank account, even before they cut taxes on my paycheck, a certain percentage that I have set on the account will get deducted and will be transferred into the 401k, and it will automatically get invested into the funds that I have selected. So for me, my 401k is 100% invested in the Vanguard VFIAX, which is the Vanguard S&P 500 index fund. And I've been dollar cost averaging that for the past 3.5 to 4 years at this point. And I plan on keeping it the same way. My 401k was still dollar cost averaging when the market went down 40% last year. I was still buying in, it was still being automatically invested, and everything was still going the same way. And even with the market being at an all-time high every single day these days, it still keeps going. So I'm still dollar cost averaging. Still the money gets dumped every couple of weeks into the 401k and into the VFIX fund. So that being said, that's just my personal strategy for investing with my automated investments. I'm not saying that you should invest in this particular fund or in a 401k too at all. So please do your own research and do whatever works best for you. And with that being said, we'll go on to my second investing strategy, which is my sort of a play account. I use Robinhood as my play account, and that pretty much is couple of $100, sometimes up to $500 a month that I'll just, slowly keep dumping towards Robinhood as and when I feel that I want to play around and I want to buy into a certain stock and see how that performs. And the whole idea being behind having a play account is it has two parts, basically. So let me just see in my notes here what I have written down. Yeah, so my two-part strategy for having a play account, first of all, is I'm always trying to beat the S&P 500. The S&P 500 is a machine. It just keeps going and keeps grinding, and it's very difficult for fund managers, individual investors, retail investors to beat that. And I'm always trying. I'm trying to pick stocks, trying to see what's new in the market, trying to see what technology is gonna exponentially grow over time. And that's the kind of stuff I'm targeting every few months, and trying to see if I can beat the S&P 500. The other strategy behind play account is to get rich quick. That might sound funny, but it's just a certain amount of money being dumped in the Robinhood account and being invested into individual stocks every month. And the whole idea is, one, beating the S&P, of course, but two, beating it so that you are getting about 1,000, 2,000, 3,000% return, in a quick amount of time. So relatively quickly to say. So that way you can, say, turn your $5,000 into $50,000 the next day or the next week. Who knows? Neither of these two things have happened to me so far. That's why we are here and talking about my investing strategy and what I'm doing and whatnot. But that's a constant trial and error that I keep working on. So right now in my Robinhood, I am invested in Tesla, SoFi, Square. Um, yeah, so that those are the three main holdings I have, and I keep buying Tesla and Square every now and then. So far, I recently started buying. It's an up and coming company. I'm very heavily invested in the fintech area right now. So hopefully, fintech plays around well over the next 8 to 10 years, and hopefully, it gives me good amount of returns. Um, so yeah, that's point two. Number three is a very gray area in terms of what it exactly is, but I'm still a part of it just because everybody else seems to be a part of it right now, is cryptocurrencies. So I have a BlockFi crypto interest account. So what happens basically is, just like I transfer money in my Robinhood account, it is post-tax money, of course, because I get the paycheck in my bank account first, and then I transfer money to Robinhood. In a similar fashion, couple $100 a month I'll transfer towards BlockFi interest account, and I have it set up such that it will 80% be invested in Bitcoin, and then 20% be invested in Ethereum. So don't know, right? I mean, I have no predictions of where Bitcoin's going to be 5 years from now, 10 years from now. It may very well go down to zero. It may very well go up to $500,000. Who knows, right? So that's again sort of a play account, but at the same time, it's making me money on a regular basis because it's a interest account. So whatever Bitcoin I buy in BlockFi, whatever Bitcoin holdings I have, or even Ethereum holdings, that gets loaned out to bigger investors out there. BlockFi does that for you. And I think right now the going rate is, I think you get about, um, it's hard to remember this, but I think you get anywhere from 1.5 to 4% in interest on your Bitcoin holdings, and 1% to 4.5% on your Ethereum holdings. So depending on how much money you have in the BlockFi interest account, that money will slowly keep adding up, slowly keep getting invested back into Bitcoin. Also, just to remind you real quick, the interest you get is in terms of Bitcoin. So it's not USD where you have to pay taxes on it, but it's Bitcoin where it's already invested in Bitcoin. As in, your Bitcoin interest automatically keeps going up when Bitcoin goes up. It automatically keeps going down when Bitcoin goes down, if that makes sense at all. Um, for the BlockFi account, up until yesterday night, over the past 2 weeks, I was really skeptical about buying in because Bitcoin seemed like it was going up, and there was no stopping it. Right, there were no breaks stopping Bitcoin's rally. And then yesterday, as soon as El Salvador started, legally accepting Bitcoin as a legal tender, it had a massive rally all the way up to $52,500. Ethereum went up to about $4,000. And then next thing you know, this morning everything just flash crashed. Pretty much Bitcoin dropped like 20%. It went down to like $45,000, something like that. And then Ethereum went down to about $3,400. And oh, Dogecoin, I do buy Dogecoin in Robinhood, and Dogecoin crashed as well. Dogecoin was about 31 cents, I believe, last night when I checked, and it went down to about 24 cents. Not sure what happened. Not sure. I watched Meet Kevin's stream this morning, trying to find out, if there was any news or certain events that caused this massive drop. But nobody knows. Nobody knows why that happened. It was probably, by the rumors and the news, where people were buying the rumor of El Salvador accepting it as a legal tender. And as soon as that happened, when reality struck, people were like, okay, great, done, started selling. And that's probably what happened. It could also be that it was a major whale or a major institution transferring Bitcoin from one wallet to another wallet, or trying to you know borrow Bitcoin, just like trying to short it and selling it so that they can create panic in the market. And retail investors like you and I, we start selling our Bitcoin as well, and then they can start buying that Bitcoin back at a much lower price. Anybody's guess. I have no idea what happened, but yeah. So that's my investing strategy. Month of September is kind of freaky for stocks, to say. So stay patient, stay invested. Um, and yeah, so automated investments, 401ks, 403bs, whatever works for you. Individual investments outside of that, Roth IRAs, traditional IRAs, Robinhood accounts, Fidelity brokerage accounts. You can automate that as well, but that is definitely post-tax money. So that's another way of investing. And then finally, cryptocurrencies, which I am all for right now, just because the market seems to be all for cryptocurrencies, where everybody seems to be adopting it, on a day-to-day basis. So we'll see how this month of September pans out. I'll definitely give you an update mid-September and end of September. And stay tuned. Subscribe, like this video below if you find value in this. If you want to see more videos like this, let me know in the comment section. Like this video, share it with your friends, and definitely come back if you want to learn more about my investing strategies. And if you want to research your own investing strategies based on what I do, and with the help of your financial advisor, you are able to invest and grow your money as well. All right. Thanks so much. See you.